As brokers and investors return to the desk in earnest following a stop-start January, analysts are gazing into their crystal balls to assess the outlook for 2025 on global commodity markets. And so far this year, the consensus view is that gold is going to stay in demand, following an impressive rally in 2024, which saw gold prices rise to new all-time highs above $2,700 an ounce. Already, markets are weighing up multiple catalysts for gold, including Donald Trump's return to the White House with an America First agenda, which could include significant trade tariffs. While the flow-on effects from tariffs are generally expected to support US dollar strength, analysts reckon that's unlikely to coincide with falling gold prices. As a case in point, investment bank Goldman Sachs flagged that geopolitical shocks such as tariffs typically boost both gold and the dollar. It was one of several points the Goldman analysts made to support their argument that a push towards the $3,000 an ounce milestone can't be ruled out in 2025 just because the US dollar is strengthening. Among other catalysts, global ETF giant VanEck said there's no reason to expect demand for gold from global central banks, a major factor behind the 2024 rally, won't continue this year, particularly if gold's status as an effective store of value acts as a buffer for individual currencies against a rising US dollar. The VanEck strategist also noted that gold's performance in 2024 prompted an unusual disconnect, where gold prices broke away from trend ETF flows for the first time in a decade as investors enjoyed a strong year on global stock markets. Sure enough, that gap is starting to close as the latest ETF data for the December quarter showed a huge fall in outflows and a corresponding uplift in ETF inflows, part of a broader surge in demand on global investment markets, which rose by 25% for the year to 1,180 tonnes. That's in addition to historically high levels of gold buying by global central banks, which has been a consistent theme in the market and came in above 1,000 tonnes for the third straight year in 2024. As gold stays in vogue, ASX juniors executing on their operational strategy in a rising gold price environment are being rewarded by investors to start the year. Leading the pack in 2025 is Vertex Minerals, after announcing it had commenced processing gold ore material through the newly installed gravity gold plant at its 100% owned Reward gold mine. Following its latest update, Vertex shares have consolidated above 30 cents, a gain of more than 300% in under 6 months, rewarding investors who participated in a $3.8 million placement last August at 8 cents a share to support the company's pathway to gold production at the Reward mine. Vertex's performance caught the eye of leading analyst Warwick Grigor at Furrows Capital, who noted in a recent research report that the price forecasts Vertex incorporated into its PFS for Reward are well below current gold prices. According to Grigor, if Vertex can meet its PFS estimates for gold production, shareholders will see strong share price performance even from these recently elevated prices. Grigor added that as Vertex ramps up production through its gold processing plant, recovered gold grades, ideally in the range of between 10 to 15 grams per tonne gold, will be the key benchmark to watch. And speaking of production, South America-focused explorer Aegea Resources ticked off a major milestone in late January, pouring its first gold at the Santa Barbara Gold Project in Colombia. If timing is everything, then Aegea has aced it on two fronts. Firstly, by initiating a maiden gold pour as the gold price nudges $2,800 an ounce, but also in terms of the quick turnaround from getting boots on the ground at Santa Barbara to pouring its first gold. Aegea only completed the takeover of Andean Mining, and thus the acquisition of Santa Barbara, in June last year, marking a rapid advancement of its stated production strategy, which is not only a tick of approval for the project, but also a nod to the ability of resources companies in Colombia to accelerate project development in a favourable regulatory environment. More details of the gold pour are set to come out in due course, but if there's one place you would like to be as a junior, it's pouring gold as the gold price runs hot.